we're doing a quick one. This one's well, not too quick, but I thought it'd be easier to do these in a PowerPoint slide out. It's usually the fastest. You'll have to forgive the lack of color or anything on this one. One of these times I'll do one with some pizzazz, some theme to it. But till then, welcome to the top 15 safest and highest yielding dividend stocks. I'm your host for this particular live segment. Decided I got bored. I was like, I want to do one more live video. So introduction, this is basically just an explanation of dividend stocks, the importance of safety and yield in dividend investments, and the criteria used for selecting the top 15 stocks. So first one we'll go through is Altria Group. This is also a lot easier because they don't have to copy and paste anything into OBS. It's all into one single form, and PowerPoint's usually the easiest way to do stuff like this. Is it glamorous? No, not in the slightest. But we're gonna roll with it anyway. I've always wondered if you could export these as like, I guess you could export it as a PDF. That's hilarious. So you can just go through each part of it as a PDF. Ooh. Anyway, whatever. Anyway, Altria Group MO. This will be. How did I order this? This one I did a dividend safety score of the alphabet instead. I should have did the 1 through 99, but wanted to try something a little bit different here. Just figured it'd be like, A, is it an A? Is it a grade B? But I probably will go back after this one to the regular scale. So it has a dividend yield of 9%, dividend safety score of a basically B. It's a leading tobacco company with a long history of dividend increases. Honestly, pretty solid. Always loved Altria Group. Next one's going to be MPLX LP, MPLX ticker symbol. Dividend yield of 8.3%, dividend safety score of a C, midstream service provider with strong financial metrics and distribution coverage. Nice. But kind of going into it a little bit. It's one of those up there with. Actually, is this one? I could have swore I own this one. Hold on. Give me 1 second, folks. I'm pretty sure I own this through an ETF, but I always get curious if I own it as an individual stock too, because I forget. I'm so used to buying and holding that I just don't ever pay as close attention as I probably should have. But yeah, it's definitely a good one though. Yeah, overall. Oh, I had it back in the day, at least a single share of it. I sold it off. That's all right. Still one that you should have in your portfolio though. And I know I have it through a few different ETFs. I just can't remember which ones. So I know I have some sort of exposure to it. Pretty much everything on these lists I have some sort of exposure to, whether it's through an ETF or whether it's through or whether I own at least one share or more of the particular stock. But anyway, moving on, we're going to go to BCE Inc. Incorporated. That's BCE. It's basically dividend yield of 8.6%, dividend safety score of an F, major telecommunications company with stable cash flows. Can't remember why I put an F on there. To be honest, that actually might have been a typo, but that's okay. Whatever. The point I'm trying to make here is it's basically, it's not bad. It's decent. Cash flows are good. Stability's there. I think F might be a little bit cruel. Might have been a typo. I can't remember why I even put that there. So Nucor Corporation, NUE, dividend yield of 5.3%, dividend safety score A. Overall, it's the largest U.S. steel provider with a robust dividend growth history. So that matters. It's a productive asset, obviously. It's producing steel, which is used in construction of big skyscrapers, most crazy commercial buildings. Um, yeah, something like Nucor Corporation is definitely one that you should always have in your portfolio. Last time I checked, I definitely have exposure to that. Then we got Chubb Limited. This is a lot faster than the last video. I'm not gonna lie, because the last one I was copying and pasting everything into the thing. Now we're just doing it from PowerPoint. So much easier doing this shit from PowerPoint. I will admit, it's doing it in slide format. Chubb Limited though, ticker symbol CB, dividend yield of 1.6%. We got dividend safety score A. Um, it's a leading global issuer with diversified product offerings and strong financials. Let's see. This one here is Owens Corning, OC. Dividend yield of 1.7%. Dividend safety score of A. Manufacturer of building and industrial materials, known for consistent dividend growth. Actually, this is one I think I only own through an ETF. Let me double check that real quick. Yeah, last time I checked, that's actually one I own through basically, as far as I know, a dividend ETF. So not bad though. Not bad at all. On to the next one though, everybody. Boom. This one is Ameriprise Financial, AMP, dividend yield of 1.7%. Let's see. Dividend safety score of an A. It's a wealth management company with significant assets under management and a low payout ratio. That is one thing to consider. So a low payout ratio means that they don't really, which means they don't really pay out a lot of their earnings to shareholders, unfortunately. But their company does grow for the most part at a rapid rate. Yeah, so I don't know. It's good if you want a company that grows for the most part. Like I said, by the way, none of this is financial advice. As I always say, none of it is really an analysis and a very brief analysis on all these. By the way, I don't go in depth on any of these. I just give a very brief overview. Um, Me personally, I just believe it's good to have some sort of decent companies in your portfolio and try to be as diversified as you can. The best way to do this is through index funds. Index ETFs are always, in my opinion, the best way to go. Just be as diversified as you can, I think, is always the way to go. Smartest thing you can do, and just be exposed to whatever you can that's actually valuable. On to the next. So what do we got here? So we got Kinder Morgan, that's KMI. It's a 6.4% dividend yield, dividend safety score of a C. It's energy infrastructure company with a stable dividend due to its extensive network. Um, yeah, Kinder Morgan's going to be around for a long time. Safety score is very mediocre for it. Um, it's nothing to really like, because you don't really know what they're going to do with their dividends sometimes. Things may happen. They may not be making as much money. Things happen. Bad earnings quarters happens. But Kinder Morgan is definitely one. Last time I checked, I remember I had them in my portfolio at the very least in an ETF. Like I always say, I'm exposed to each of these companies in an ETF of some kind. But I also do own a lot of these companies as a single share majority of the time. Let's see what else we got here. Yeah, this is going along a lot smoothly and a lot more quickly than the other ones. So this one's Enbridge Incorporated. That's ENB. Dividend yield of 6.9%. Dividend safety score of a C. North American energy delivery company with strong distribution coverage ratios. Um, Honestly, utility companies are the best. I was talking with my boy, Daddy's Home. It's one of the YouTube guys I was talking to, and how he's talking about how utility companies are really good as far as fuck, I'm just killing it today. Awful. But utility companies are great in the sense that they do pay out a lot of their cash flows to shareholders. They know what they are. They serve a particular function, and energy's never going away. In fact, those who own energy companies, in my opinion, own the world. So, you're not getting the sexiest growth out of them, but you're actually getting good dividend growth from all these companies since they do pay out their cash flows pretty well. Then we got Verizon Communications, VZ. This one's legit my favorite out of pretty much all of them. Majority of them actually, because Verizon has a 7.2% yield right now with a dividend safety score of B. It's a telecommunications giant with a reliable dividend yield, which is important. You want to make sure that whatever you're getting in is a solid company, managed well, has doesn't have to have a big product pipeline, but it has to have a service that is spread out everywhere. Verizon is one of the biggest, if not, well, I think AT&T is technically the biggest, but as far as like telecommunications goes, Verizon is like in the upper echelon. So you always want to. I think it's always great. I think it's a must to have Verizon in your portfolio. Verizon's one of those companies that I proudly own in my portfolio any day of the week for sure. Um, this next one is British American Tobacco. It's BTI with a dividend yield of 8%, dividend safety score of C, overview, a global tobacco company with a solid track record of dividend payments. As much as I don't like cigarette companies, and I don't want to profit off death. I try to avoid that. It is true that a lot of the ETFs that I have hold companies like British American Tobacco, and so I do have that exposure to it. But if it's if it's a company that's profitable, even if you don't agree with their ethics, it's not like they're forcing cigarettes down people's throats. They're not like shoving it in their throats, but like, you know, it's like you're part of the problem if you invest in companies like this, but they do pay out a good dividend. So if people are buying addictive cigarettes, then they're buying them. Might as well take home the profit, I guess is what I would say. This one is Brookfield Infrastructure Partners, BIP, and that is BIP basically. Dividend yield of 4.5%, dividend safety score of B. It's diversified infrastructure company with stable cash flows and growing dividends. Yeah, that's pretty much it. So as much as I know an okay amount about this company, but really don't know much. I know enough about their like financial statements. They look okay, look good. As I always say, always do your own due diligence. Always talk to a financial advisor, please. The love of God, it's probably the smartest thing you can do. These are companies that I would personally have in my portfolio, if not I already do through a lot of ETFs, to be honest. But yeah, if you're looking at diversification to your portfolio, these aren't bad. But like I said, talk to a financial advisor. Make sure this is the right move for you. Um, what's right for me may not be right for you. I've got a different risk tolerance than most people. I don't mind bear markets. I don't mind, even though I don't like volatility. I know it's a part of the game. Um, but diversification is a good thing. I remain as diversified as I can across all asset classes, and it's really the smartest thing one can do. Ultimately. But yeah, it's Enterprise Product Partners, 7.6% dividend yield. Yep, Dividend Safety Score C, leading North American provider of midstream energy services. And yeah, Enterprise Products Partners is actually a decent one, but safety score, some of these safety scores are a little sketch. And anyway, another one is Stag Industrial. That's STAG. This one's actually in the REIT sector, but it's one of those that I think should be pretty much in anybody's portfolio. It's got a fairly safe dividend at a rating of a B, dividend yield of 4.3%. It's basically a real estate investment trust specializing in industrial properties. Smart, winning, duh. I just need to drink some Sprite real quick. What else we got on the table? Yeah, it's Stag is one I got in my portfolio for sure. That's one I at least own a bare minimum of a share of. Um, there's a lot of interesting REITs out there that I think should be a part of one's portfolio. As you all know, I'm just probably one of the biggest. I'm a REIT shill for sure, real estate investment trust shill, but um, I do believe that there's a lot more than just REITs out there in the market. Um, you shouldn't limit yourself. Is basically what I'm trying to tell you guys. Try to be exposed to whatever you can. I had a chip in my shirt. God, I was like, what the hell? Um, try to see if there's anything else I need to add here. Nothing else. Let's see. So we got Stag. We did that one. It's the summary recap of the top 15 safest and highest yielding dividend stocks. This is just kind of the importance of balancing yield and safety in dividend investing. I think that's really important. Kind of going in on that, on the importance of balancing. So you do want to balance yield and safety, and the reason why it's so damn important is, not everything that's a high yield is a good investment. Well, I'm always looking for the higher yielding ones. That's not all I look for. I want to make sure that if it does have a pretty high yield, there must be a good reason for it. I want to make sure the cash flows are steady. Like, is it just market conditions that are making it to where the yield's higher because the share price is going lower because of lack of investor sentiment? I'm always looking for the times when investors are very bearish on the real estate investment trust, on just real estate in general. Um, Honestly, any dividend stock that is being crushed by bear market conditions, I'm always willing to add to my portfolio as long as it's a great company with steady cash flows. I'm only in it for the steady cash flows, and as long as it'll grow over time, that's the most important thing. Growth over time is not a guarantee, by the way. Past performance does not equal future results. That is like the one big thing. Um, Still, talk to a financial advisor. Talk to them about balancing yield and safety in dividend investing. I think you want to make sure the companies that you're investing in are safe, are going to be there. They have solid infrastructure. They're a real company, not some fake BS company that pays out a dividend. And then final thoughts and investment considerations. You know, the main thought is diversify, diversify, and diversify. And if you're going to diversify, try to diversify in things that have positive earnings, um, positive, good cash flows, lack of debt. You want to make sure the company that you're investing in is not riddled with debt, even though like Verizon kind of breaks that rule a little bit sometimes. AT&T kind of breaks that rule too. That's one thing I have. But yeah, as long as you're like super duper diversified, I think you're always going to be, in my opinion, on the right track. I don't really ever believe there's anything set. I don't believe in such a thing as over diversification. I think that people who say there's an over diversification, I don't believe that in the slightest. I think it's good to be diversified across the entire globe, across things as simple as commodities, real estate, whether it's international real estate, whether it's United States. Um, remain exposed to everything, to every asset class, because even if your exposure is very minimal to a specific asset class, the exposure in itself is the most important thing. A lot of the bond ETFs that I have only take up about 1 to 2% of my portfolio per bond ETF. And then same goes for most of those regular dividend ETFs. Point is, my entire portfolio is consistently paying me dividend payouts. I get it any day there's a trading day. I'm pretty much getting a dividend. I think that pretty much every day of every month that's a trading day, I'm getting some sort of dividend payout. It's very rare that I don't get something. As far as the total payouts go, it does vary a little bit. Because not every company I own is a monthly dividend paying company. Some of the companies I own, most of them pay quarterly. But for the ones that pay monthly, some of them are ETFs, some of them are, and yeah, I'm not gonna lie, I own some of the yield max ETFs. I don't think they're a good investment by any means, but I wanted some sort of covered call exposure to certain companies. So I was just like, oh fuck it, I'll get a share of each of these yield max ones. So far, they've paid pretty decently. Still not gonna recommend them by any means. I don't recommend anything, but at the end of the day, I could be an idiot for having them. But I'm just like, oh screw it. Any of my future gains any of my future share price gains unrealized will cover any losses. Unrealized losses from the yield max ones, because I don't plan on ever selling them either. Everything I buy pretty much I don't ever plan on selling. The only thing I swing trade at this point in my investing career is basically the BITI. It's a inverse ETF that allows you to bet against Bitcoin. I believe that'll actually fund my portfolio for the not till the end of time, but will continue to fund my portfolio in a way that just kind of works a lot. So I'm really just kind of going that route a lot of the time. I know you guys are probably wondering, why do I keep using this headset? For one, I am only using the headset just to kind of keep testing it out to see what its longevity is like, to see if it can be used frequently. It's fun using it for a live video, because doing a PowerPoint, I can look at the screen. I don't have to have my microphone in a certain way. I just have this sweet little mic here. I know the quality is not the highest. I will eventually go back to my sweet Yeti microphone, but I think sometimes you got to give your microphones a break. And yeah, I'm giving my Yeti one a break. But yeah, those are pretty much my final thoughts. Almost. I'm trying to think if there's any other final thoughts I want to add. Um, I'm just really I'm really just a big fan of dividend stocks. This is what the channel's about primarily. There are companies out there that don't pay a dividend, and I have them. I have exposure to them through ETFs. I have shares of them, but they're not ones that I like to hold. I don't like holding them, but I do hold them if they're a good company. They do share buybacks, I'll accept it. But I do believe that companies that pay a dividend are companies that I do want to be a part of, because I know it's real cash flow from the company that's coming to me directly. I'm not waiting for the share price to go up because of customer sentiment and stuff like that. And I think that's the great thing about bear markets with dividend stocks, is that during a bear market, I'm buying up as many different dividend stocks as I can. Now, You're probably wondering, well, why weren't some of the big names listed on there? Well, remember, this list is about the highest yielding, the best stocks of the higher yielders. So you're not going to see Coca-Cola, even though Coca-Cola is a hell of a stock. US Bank is pretty sexy. That's a good one. But what you're really always going to see is, in my portfolio primarily, is just a wide variety of companies. The more spread out you are in different asset classes, you're going to be. I'm not going to promise that you're going to have safety by any means, but like you're going to have, there's a lot going on there, a lot of good stuff going on there. So I'm a little lost at the moment, you guys. Sorry about that, but I think you all know that diversification helps. And also, we are ignorant to what's going to happen in the future. Everybody is ignorant to what the future holds. We can project what the future holds to the best of our ability, but it's not a guarantee. So, anyway, I don't think I have anything else, any other thoughts. Let me think if I just kind of rattle in my brain real quick, see if I have anything else I want to add to this. But, keep investing is all I really want to say. I don't care what you invest in, to be honest. I mean, I do care, but like I just want to see you be diversified in things that are great companies that will be worth holding on for the long term. But I talk from the viewpoint of a long term investor, not a short term trader. The only short term trades I do are with a biddy, and I do believe that some of your portfolios should be actively managed, and the biddy is the closest actively managed uh, stock I have. It's really an ETF, but it's a bet against Bitcoin. I think that's a smart one, but it's good to have because I think if the stock market crashes, so does Bitcoin. I'd like to believe people would be smart and have Bitcoin crash really, really hard before the stock market did. But yeah, if people have any belief in Bitcoin, they're falling for a Ponzi scheme, unfortunately. And yeah, anyway, I'll see you guys on the next episode. I might do another one here in just a